Good afternoon. This is Vishal Agarwal. Whether you're in Singapore, where it's the evening, or early in the morning in Silicon Valley, welcome. We're delighted to have you back. I'm Vishal Agarwal, the president of Thai in Africa, and I am absolutely honored and delighted to welcome you and introduce you to this spectacular panel from our region. We've assembled an incredible panel that represents the best and the brightest of our investors who today are backing startups and founders, mentoring them, giving them money, taking them to the next level, and positioning them for great joy and great success. And to get this started, I want to bring to all of you a very, very special young investor, venture capitalist. You must all meet and get to know Kushira Naidu. Kushira from South Africa, based in Johannesburg, is an experienced tech investor, a chartered accountant, a venture capitalist. She works with NetBank Ventures. She is at the forefront of disrupting the whole gender bias on the continent. She doesn't believe in backing women entrepreneurs, but as much as mentoring them, working with them, and expanding the gender equality in the region and the opportunities for our young entrepreneurs from a diversity standpoint and inclusion standpoint. Please join me in welcoming Kushira Naidu. Kushira, all yours.
Hi, everyone. That was a really good intro. Thank you so much to our President Vishal for the kind introduction. My name is Kushira, one of the very few female investors in Africa, and I'm so glad that we have really good representation on the panel today. Which I'm sure you guys are really eager to see who's on the panel and what we'll be discussing. So yeah, as we all know, Africa has been on everyone's radar. Where are we now? What's happening in the investing space in Africa? So yeah, here with me today, I have Olga, Falabi, Igosa, Ruby, who are all highly accomplished investors in Africa, who have been backing entrepreneurs across Africa. Myself, my name is Kushira Naidu, and as Vishal said, I am part of a corporate venture capital fund, and in personal capacity, I have been backing entrepreneurs in Africa basically my entire life. So now to jump into my panelists, I'd like to hand over to them to introduce their funds, who they are, and why do you guys do what you do? So I'd first like to hand over to Olga, Falabi, then Ruby, and then Igosa, if that's okay. Olga, over to you.
Thanks a lot. Hi, everyone. It's my pleasure to be here, and thanks a lot for the invitation to the panel. I'm an investment manager at Target Global. Global venture capital firm with $1 billion assets under management. We invest cross stage in different geographies with kind of historical focus more towards Europe and Israel, where our offices are and where most of the team is located. But since recent time, we started actively looking at other regions as well, and we led the round. And I'll be very honest and transparent. We are new to African investment scene, and actually the reason is that it's looks pretty interesting from all the macroeconomics perspective. But I'm sure that we will touch on that later. And we led the round in a Nigerian company called Kuda Bank. It was the largest fintech seed in Africa, and that's how our journey in Africa started. And yeah, so as a firm, we invest from pre-seed to up to Series C, D, and we invest in IT companies, in marketplaces, software space towards like different subsegments, education, health, fintech. I personally focus on fintech, and I've been in this space for the last 5 years. And yeah, the first African company we backed is Kuda. We are actively looking more. And yeah, we'll be happy to chat about the rationale and all the reasons later towards the panel.
Thanks so much for that, Olga. That's great. I'm sure there's other panelists here who've also backed Kuda, but let's see.
Hello, everyone. Thanks to Vishal for putting the panel together on the team. Kushira, thank you very much for the introduction. My name is Falabi Esson. and I'm a founding partner of Untitled Capital. Previous life, multiple things on the African continent, including entrepreneurship in Nigeria, where I failed spectacularly, and it taught me all I know. So don't need to know anything more when you've done a business in Nigeria that didn't work. After that, I started business connecting technologies from the world to the African continent, and then I became an accidental VC. And accidental because an old friend of mine came back from the United States and set up a firm called Untitled Capital. We co-founded this firm called Untitled Capital based on the ideas that there was a sea change happening in Africa. Basically, there was a big change in the connectivity, mobility perspective. We had telcos spreading out across Africa. This is back in 2008. We had smartphones coming into play. We had financial institutions spreading their reach, doing different things. We had data exploding, and we had people coming back from the diaspora. So with all these things together, we saw an opportunity to connect telco, finance, mobility, and people, and create a sub-Saharan African tech business, a venture capital business that supported founders who are using technology to essentially enable their business ventures. It took us 8 months. We set out to raise $100 million. Olga, interesting for you. It took us 8 months to soft circle about 2/3 of that, 67 million. In the 9th month, we sent out all the documents to all our investors. And 10 days after that, Lehman Brothers collapsed. You know, a week after that, we got letters back from some of the investors saying, no, thank you, we're no longer interested. We were now below water, underwater with our fund, on the beach for 2 years. And it took us 2 years to close our fund at essentially $42 million and change in 2010. So in terms of investments, one interesting point there is that the DFI stayed. The private local investors all fled. So keep that in mind as we go through the opportunities and what is changing on the African continent. We invested in 5 companies in the end. A couple of them are in the fintech space. One is a unicorn that you all know, InterSwitch. The other one is maybe the largest, let's say, mobile money company in Nigeria today. And then we have a few other ones doing interesting things in social commerce, AI, in utilities lending and vending, and still in the mobility space, enabling greater smartphone penetration across the continent. I mean, today we still have sub 30% smartphone penetration in Africa, and that's really holding back all the wonderful things that the Kuda banks and other kinds of investor companies are trying to do in the continent. So that's me. Thank you very much. It's great to be here.
Thanks so much for that, Falabi. And yeah, you're right. We will be visiting that unicorn topic later. I'd like to introduce Nina right now. And so Olga, I know you're streaming in from Berlin. Falabi's in Lagos. If Nina and Igos and Ruby, when you introduce yourself, also just, you know, tell us where you're from and you know, where you're from and what your interest in Africa is.
Good morning. I know some of you. Good morning, Falabi. Olga, how are you? Very nice to be here. My name is Nena Nkongo, and I am an investor across the continent. I've been active through a vehicle called Digital Growth Africa since 2015, and very much like Adlevo, it was one of the earlier institutional venture capital vehicles that focused across sub-Saharan Africa. I think many of us recognized many of the dynamics that Falabi has highlighted in terms of talent, in terms of technology, and really the opportunity that technology had to transform nearly every single aspect of life in the continent. And so investing in that was and continues to be super exciting. I'm currently the founder and managing partner of a new fund called Atundi Ventures. And while we're focusing very similarly with some of the same team on deploying capital in tech-enabled businesses in Africa, I think what I've learned in the past 5 years is that team and culture make all the difference. And what we're going to do is quite explicitly in a very structured way, focused on the founders who are building the better business cultures to survive and thrive in what's often much more challenging operating environments. There still is a lack of infrastructure across the continent, which makes it more difficult to build businesses. They tend to, tech-enabled businesses tend to still need to be quite operationally savvy in our markets. But I think that backing these founders that are doing such great work is super exciting, and I'm super glad to be part of the ecosystem.
Great, and we're happy to have you here, Nina. Thank you so much for that. Handing over to Ruby now, and then we haven't forgotten about you, Igosa, our OGVC.
Hey guys, thank you guys so much for having me. Kashira, Vishal, I think putting this together has been, a great experience and a great panel that you guys have set. A little bit about myself and Greenhouse. So currently the principal investor at Greenhouse Capital. We are an early stage investor across the continent. We've been sort of on the continent, not just in an investment capacity, but also an operating capacity. So we have a parent company called Venture Garden Group. We're a venture builder on that side. And our founders sort of came back to kind of their, they went off to the US, they came back to Africa, and they started looking at how do you sort of develop and create more opportunity through technology. And so interestingly, running sort of a venture building company over the last decade, and then sort of saying, actually, how do we A, put our money where our mouth is, B, how do we back entrepreneurs that look like us, and how do we kind of share some of the experiences, as Folabi had said, how do you actually share some of those experiences that you've gone through to kind of help some of the younger entrepreneurial talent actually navigate what is actually a really complex ecosystem, right? And so Greenhouse Capital sort of started 3-4 years ago. It was largely initially a sort of private capital deployment. We have about 25 companies in our portfolio. Often we're sort of first or second check investors in companies such as Helium Health and Migo and some of the larger fintechs that have come out of the continent. And more recently, we have really had a push towards creating a balanced portfolio, both from a gender and geographic perspective, and obviously also from a sector perspective. And so we also run a program for women entrepreneurs. That is a Pan-African program. It's a source of them sort of receiving mentoring, making sure that there's an aspect of readiness so that they are able to launch into the market. They have a really deep network across the continent. And then of course, we also back them in a sort of effort to make sure that our own portfolio is just as balanced. And then beyond that, I would say, we look at, we're based in Lagos, but as I said, Pan-African, we look at largely fintech and fintech enabled businesses. And I think as we go through this conversation, I'm sure we'll kind of get to the crux of sort of, how financial services can kind of cut across multiple different industries and sectors. And so, we largely have invested in sort of payments and infrastructure companies, but looking more into sort of the area of how health crosses with finance, how kind of, non-traditional, let's say e-commerce crosses across finance as well. So yeah, really excited to be here, and yeah, excited to kind of getting to the details.
Awesome. Thank you so much for that, Ruby. And we're really keen to hear more a bit later. Handing over to Igosa.
Ah, yes, the so-called OG. I'm not an OG because I didn't start this process. Folabi and Yamia that Levo sort of opened the eyes to everybody else. So my name is Igosa. I am an investor with a firm called Echo VC. We're a seed and early stage technology venture capital firm with offices in Lagos, Nairobi, and London. We have been in the market investing in Africa since 2014, but the root of the Echo VC was fundamentally after I left Intel Capital in 2010. I had been fortunate enough to invest, across the globe I led consumer internet investing for Intel Capital out of Santa Clara for India and parts of Asia. And so I had, and done, investments in the US and pretty much globally. And so what we had was an interesting perspective on where innovation, literally on unbounded geographies for innovation. And so coming out of Intel Capital, my entire thesis was to take the seed and sort of seed plus investing mentality to markets that we felt were underserved. And in our view back then, the two biggest underserved markets were Africa and Southeast Asia. But of course, like every crazy entrepreneur, we had an idea that I think most of the world didn't quite understand. And actually most of the world tended to be quite dismissive of those two geographies. And so in 2012, I set out to sort of prove out the thesis by picking Africa. And so we got started in late 2014, started investing in 2015. And so it's been 5 years. The original goal was, as like I said, to take seed and early stage startup investing to these markets. And, and of course, part of the process was also sort of understanding how the ecosystems, which are fundamental to growing successful investors, how those ecosystems get built, how they get supported, how they get syndicated. And so it's been 5 years of a lot of activity, and we've learned a lot. I think we have now 36 or 37 portfolio companies. We should get to 40 by the end of the year, actually. And we've seen a lot across sectors. We are very diversified across sectors. So we've done the fintechs of the world, health tech, supply chain optimization, media, food, culture, ag tech, AI, so we've done a lot, right? And so I think we pride ourselves on being able to speak confidently to most sectors. And going forward, we're very excited about the impact of technology and the ability to distribute it into the different traditional offline sectors as well. So glad to be here. Thank you.
Thank you so much for that, Igosa. And I think we're all on the same page when it comes to technology in Africa and investing in the future of Africa. So coming to our first question today. So the topic of the panel is investing in the future of Africa. To give our audience today the lay of the land. So if you had to, describe, what is the opportunity, what does it look like, where did we come from in 4 to 5 lines? I'd like each panelist just to outline in 4 to 5 lines their thoughts on investing in Africa and kind of lay the lay of the land for our audience. And I'd like to work backwards now. So Igosa, we'll start with you.
Yeah, sorry, I was on mute. So in terms of the landscape and what it is now, I think the word I would probably pick is vibrant. There's a lot more activity. There's a lot more energy. You're seeing a lot more cross-border, syndication and partnerships. And I think more importantly, it just feels like a lot of the super early money that should sort of power the growth of the ecosystems, and I'm talking about sort of angel money, sort of beginning to recognize that, you can sort of build meaningful companies, that are digital, right? In the historical sort of purview, they would not touch anything that did not have stones, bricks, cement, or oil, right? And maybe even gas, right? But now, they now see, so you can build digital skyscrapers with these companies, and, we're seeing a lot more activity. And you're now getting more entrepreneurs, whether they're local, whether they're repats, whether they're combinations thereof. And, and I think that the third and most important change is that we're seeing African companies now looking outwards. So they're building products and services that can serve not just domestic markets, but international markets. And that is incredibly exciting.
Thanks for that, Falabi. I'd like to go with Falabi next, but thanks for that, Igosa. I think that, if African entrepreneurs do really, are building global type companies, it is quite important that they're not just solving for for African problems. Falabi, I'd like to know your thoughts on the lay of the land, especially in the investor landscape in Africa, but also touching on what Egosa just said about the need for solving African problems versus the need for solving global problems. And what are your thoughts on that?
Thank you very much. Egosa has mentioned some very, very key points: the energy, the vibrancy, the cross-border collaboration that's happening. And this is going to be enhanced by new types of policy instruments that are coming into play in Africa, and the young population that's really seizing the mantle and driving growth and all kinds of innovation across the continent. So when we started, we had actually very few companies to choose from. Slim pickings they were at that time. And I think what I see now is really like almost like a surfeit of opportunity, right? Across the spectrum, right? So there are seasoned entrepreneurs who've actually come through a couple of cycles. So entrepreneurs are on their second or third iteration, which is wonderful. You've seen entrepreneurs that are also bringing back their own capital into the environment, which is wonderful. We're seeing, as Egosa mentioned, angel investors who are business people who see opportunity and are now mentoring and coaching and backing entrepreneurs. So I think that the landscape is very, very vibrant, very rich, very interesting. And these are all the positive things there are there. Now, we need to look at the other side as well. You know, and Egosa knows me very well. Nana knows this. I'm always looking at both sides, you know, like never just looking at one side. So the other side is that we haven't gotten quite the same vibrancy in terms of regulatory. So the regulators are way behind and taking their time catching up. I think this is an area where all the investors and the entire ecosystem that Egosa has talked about needs to take note and actually help the regulators and help ourselves to create the environment that will really make these opportunities really come to light. So I would say, in a nutshell, exciting times, exponential growth on the side of the ecosystem, but difficulty pushing against regulatory systems that are still somewhat archaic and need to be changed.
Thank you so much for that, Falabi. I'd like to hand over to Ruby now. What are your thoughts?
Yeah, I think I definitely agree with everything that's been said. And I think that there's a lot of raw talent that exists on the continent. There's a lot of talent that's being, that people are seeing more and more. A lot of younger entrepreneurs coming through, whether, as Falabi said, whether it's the first or second round that they're starting their entrepreneurial journey. And I think that, you know, one thing that's super important is that even though technology and transformation is happening on the continent, there is still, I would say, a need to continue to support more local entrepreneurs and sort of balance that out a little bit. And then I think, you know, part of that talent question is also, well, are there the support systems on the ground to support navigating the challenges that exist, right? And so I think it's one thing to see, it's amazing to see sort of the shift in international attention that we're seeing within the continent. But I think it's also interesting to see the rise of more and more local investors that are coming up from the local regions, right? So whether it's on the ground in Lagos or Nigeria, wider Nigeria, whether it's on the ground in Ethiopia or Uganda or wherever. I think it's an interesting change that's happened where actually a lot of local kind of VCs were existing, but maybe didn't have as much kind of capital to deploy. That narrative is starting to change. And I think that's super important. And as you said, I think, you know, companies are kind of looking at cross-border, right? So the challenges that exist in other parts of Africa, they're local challenges, but have, you know, you have the possibility to actually implement the same sort of technology or the same sorts of solutions across in other regions. And so I think that, you know, there's still a large sort of untapped space and market across the continent, not just to solve sort of these international problems, but there's a lot of kind of, you know, there's a lot of individuals that are either underbanked or underserved or you know, still have predominantly offline operations and need to be moved online. And And so I think, you know, we're starting to see kind of that shift of, you know, Lagos entrepreneurs, for example, trying to partner with like a Kenyan entrepreneur to solve a similar kind of challenge. And so I think that as regulation, as governments start working together even closely, hopefully that process becomes easier. I think at the moment there's still a lot of somewhat red tape to kind of progress, right? Whether you're in the financial services sector, you need this license and that license, and it takes 2-3 years to sometimes attain those licenses. And at that point, maybe a larger incumbent has actually come in and overtaken. And so I think those aspects need to be more entrepreneur friendly. And I think that will kind of hugely uptake the growth story.
Thanks so much for that, Ruby. And I agree with you that they say it takes a village to build to grow up a child. I think for new businesses starting in Africa, there's certainly a lot of support that's needed. And Olga, just before we come back to you, I'd like to ask Ruby what her thoughts are on the role that angels play in Africa. So we spoke about, it takes a village. What are your thoughts on, have you experienced this? Just generally, what are your thoughts? And especially, being an early stage investor.
Yeah, I mean, I think it's so invaluable. Like, you need these people who are going to be able to, who have the experience in building businesses in Africa, right, from the very, very early stages. I think people who are able to support that younger sort of entrepreneur without certain pressures that come with, let's say, a VC fund, right? So a lot of VCs are going to be pressured by, these sorts of ROI metrics and whatever else. And I think angels have, of course, that kind of flexibility and the on-ground kind of support and understanding and network that they bring is hugely important. We're seeing a lot, there's a huge angel network, both within the continent through sort of the African Angel Network, for example, but also within the diaspora, right? More and more diaspora are starting to come back and take a look at their home countries on the continent and sort of saying, actually, we're starting to see something bubbling, right? There's things happening. And so how do we kind of get involved? How do we work with some of these entrepreneurs more on a day-to-day operational basis? And obviously stories like, these exits that have happened in the last year, stories like that help increase that interest from abroad as well. So yeah, I think it's you can't put a price to it. It's so important to have someone who's going to support that early stage and fill that gap that exists.
Couldn't agree more. Olga, going over to you, if you could just give us your thoughts on the investment landscape, and then it would also be great if you could touch on the angel question I raised for Ruby.
Sure. Actually, I will even start with a question on angels. And from the perspective kind of international investor, just really new to African region overall, right? Angels are crucial to any business in any country, because basically it's the best people to advise, especially on early stage, are people who did build businesses before, who know the ground from any other perspective, like regulations or anything else. And these are the people who are the most crucial, especially on early stage and the all way long, because they might know what are the obstacles on later fundraisings, on later stages, maybe towards exit. And the more people of that type are in the beginning, kind of any investor who enters the business later understands that valuable angels are crucial, and no one will be cleaning up just to have all ownership, right? So, and kind of moving to it basically it's all about the value which investor brings on top to the business. Going kind of back to the first question of the landscape overall, I would actually go a bit from, and this is the way how we started investing in Africa, going actually from just really macroeconomics fundamentals. The market is huge. the people are very young, and I really like the definition of the landscape like vibrant. Huge population, young people create so many opportunities for any business literally to leapfrog. And essentially being, all of us being in tech business, we kind of can see it in different countries as well. An example, I myself, I come from Russia. And banking sphere in Russia is much more developed than Europe, where I live right now, like literally 5 years ahead of German banking system, right? Well, this is because it's emerging market, relatively emerging market, where everything emerged and happened like later than in developed countries, which means that you can add more tech to all these things. And that's why banking is better. If you look at Asia, there is a complete leapfrog of banking system and concept overall. There are WeChats of this world, which basically leapfrogged and became financial ecosystems themselves, right? And the same opportunity exists in Africa. So when you have like so many people, young people, and also teams who are eager to create something, it's just huge opportunity for any business to skyrocket. It can be financial, business, education, everything. And that's what actually caught our eye. And what is also what was also very impressive to my mind. I mean, again, I go with the fintech background and as fintech investor, I actually see a lot of, let's say, moves when regulators look at in the direction of innovations. And this is super important when you have also kind of young and huge population on the ground to create, when you have talents who also, to the topic of diaspora, coming from other countries back to their hometowns, who eager to create and build something new. And when you see the regulators who also eager to change something, this is actually the best environment to be. And we see it with international investors coming. We see it with the first exits in the market, like big exits, like Paystack and Stripe, right? So all of it just really helps to ecosystem to move faster and to become more developed and really become more interesting for every international investing. And the last point, I think that I went kind of really from the beginning of this world, like looking at macroeconomics, but what is very important, I'm a big fan of all emerging markets, because the opportunities for leapfrog, they create, basically, they are great from two perspectives, right? They're great for population, because it's really opportunity to build new big things and like lifestyle way of products, not just copy paste from something what is in other countries. And another point, this is great for investors, because this is the opportunity which can allow basically the market itself with this leapfrog opportunity can grow that fast that none of developed countries can provide anymore. That's why it becomes really big opportunity and relatively undervalued comparing to Asia, which attracted already tons of money, with LATAM, which went kind of next after Asia. And basically Africa is still has like really just emerging in that space. And this is what caught our eye, and this is the basis to kind of explore further in the region.
Awesome. Thanks so much for that, Olga. I mean, the fact that, as you said, Africa is an emerging continent with a whole lot of different markets, I'd say, within it. I'd like to have an open question to the panel. So just unmute yourself and speak if you'd like to, and we can kind of fight it out to see who wants to speak. But, from the rest of the investors, why are you investing in Africa, and why do you believe that there is great potential, or what is the opportunity? Who's gonna go?
I think we've, Kashira, I think in so many words, many people have already articulated the rationale for deploying in Africa. But I kind of wanted to offer a counterpoint to what Olga said. And while I am incredibly encouraged by the increase, I use the word velocity and momentum that we've seen over the past 5 or 6 years, Africa is still relatively underinvested by most. Most institutions, while there's been an increase in the number and amount of angels, there still isn't a lot of money that is being allocated to this opportunity set. And I'd like to just point out that, I think there are many people and organizations with, I don't want to say just good intentions, but that are working to support and build the ecosystem. But capital is also a necessary ingredient in the mix. And I would like to, sort of just offer that, we're all here doing our work. And I think our work is to sort of be evangelists to the rest of, to the ecosystem, both inside Africa and outside, to sort of bring the money so that we can execute on these ideas. I don't think Africa is short of entrepreneurial spirit and energy and capital. I mean, again, I think we lack in many instances sufficient diversity, sufficient depth of capital to really execute on them.
That's an excellent point. And I'll add that, and maybe that's an outcome of sort of the somewhat anemic, flows of capital that could change. But the other point is that Africa tends to be, there are more traders and less investors. That's a huge problem, because then you're now looking for very quick flips. That's not how you build an ecosystem. It's not how you do anything at scale, right? So, and maybe that's just a function of people trying to figure out how to create, quick story snaps and in the absence of meaningful capital. But I haven't done sort of emerging markets elsewhere. I also know that we have to earn our stripes. And, and I think, to the bigger point, one of the things that will happen probably as soon as next year is that, people are going to wake up and start to see real businesses, not, what I like to call agri-chicken type businesses that are sort of corn-fed, and when you now figure out there's very little nutritional content in them, but real sort of, farm-fed, open plains type businesses that have the resilience and the strength and the growth. And I think we'll start seeing them sort of become more public in the next year. But, if you sort of talk about the big opportunity, everybody sort of talks about pay stack, sort of, ground to penthouse 5 years, and then, and that's great. I think it was a good sign of what's possible. I always kind of laugh because, on a pound for pound basis, I'm actually aware of businesses that were and are doing better than pay stack, which is sort of just, get everybody even more excited. A few more secrets out there, but they still exist. But it is about trying to get more capital, right? And, not just to sort of international investors, but to local investors, right? Because local investors tend to have a lot better they have a lot better line of sight about a lot of things. Because, we see some, funding, transactions, and we're like, don't even have done that one. So you'll see more and more of these things, but we need to have fewer traders, more investors. We need to have more capital, and and the truth of the matter is that the span of what's possible that we haven't sort of touched is so significant. It's really impossible to truly grok, and that's why we're all very excited. It's not just us coming back. For a lot of us who've come back because it was Africa that sort of invested in us, and now we're going back to invest in Africa, right? And so there's the full circle. But there's also a ton of entrepreneurs that are going to build the next generation of product and services that can serve the continent in addition to being exported. And if we look at that, pick a sector. Is it education? For sure. Is it ag? For sure. Africa is 50% of essentially what's left of investable farmland. Is it health? Pick the largest addressable markets. Africa is just going to show up as being underserved, or in many cases unserved, right? So that's, I think, part of what we've done as investors. We've invested in companies that we believe drive infrastructure gains. So we invested in a company a few years ago that essentially should be able to drive telco infrastructure to a cost structure that can allow you to support rural populations, right? And that was kind of important because you're going to be able to do that versus serving urban and peri-urban, right? How do you get distributed money? How do you get distributed financial services? How do you get distributed education? Those are all things that, you know, are still sort of looming and pretty much untouched. And, you know, I've always said this in Africa, that for every company that sort of gets the large valuation or the pop, you can probably fund 10 more exactly, and you'll still be at 10% of the addressable market, which is kind of interesting. So very exciting things up front, but we need more investors and more capital, you know, and really sort of more collaboration.
Thanks. Can I jump in right there, Kashira? I mean, I'd like to support what Agosa said and bring in maybe two perspectives. One is the last word he said, collaboration. At the end of the day, you know, trust is the essential element for investment, both on the inflow for the VC or the PE guy, and also for the guy making the investment into the entrepreneur. You have to create trust in the system, and that's something that is still in very formative terms in Nigeria, and I think in across Africa. Governance is a big issue. We still have to do a lot of work with entrepreneurs and with actually even with investors, in quotes, on how to create trust and how to create good governance within organizations. That's one thing. Second thing I'd like to build on what Agosa mentioned, very interesting point, is he talked about infrastructure, but then his example was infrastructure for rural telephony and rural telecommunications development and things like that. Very important point, because today, as Agosa himself also mentioned at the beginning, fortunes have been made from resources in Africa. They've been made from oil, they've been made from gas, agriculture, trading, things like that. And it's now shifting towards data. But we still have a huge amount of work to do in providing roads, rail, food, transportation, the whole works that actually, you know, people need, mortgages, houses, and all of these things then have a huge digital footprint around them that can be built around them. So I think there's a lot of capital required, say, for example, to feed the African population, to educate them, right, to connect them. And on top of that, there's going to be all kinds of new services being built in the digital space, which is where most of us are investing. So the point I'm trying to make here is that it's wide open. It's wide open, whichever way you want to go. The world's moving to digital transformation and spaces, but we still have a huge amount of traditional stuff to do in Africa, and both of them need to go together for us to achieve the potential that we have.
Thanks so much for that, Falabi. Ruby, is there anything that you want to, you know, add some color to or add on to what Agosa and Falabi's already said?
Yeah, I think the other thing I'd like to add is, you know, the discussion around capital for investors, right? And also capital distribution for companies. I think slowly, I'd like to be optimistic and say sort of slowly, we're kind of moving away from this Africa discount that exists. And I'm not sure if other investors on the panel have seen that, right? But a lot of the time when you're having conversations, whether it's us as an investor looking at LPs or even bringing sort of international co-investors for our own companies, that sort of perception of the risk associated with investing in Africa, I think is slowly starting to go away, but still definitely exists and takes a long time to kind of close on those types of discussions. And it's interesting because when you look at other regions and other emerging markets, right, when you look at kind of the composition of an Indonesia or the demographic composition of an Indonesia or Southeast Asia, that discount it feels different. Because there's a path that they've been able to follow under sort of India and China and that growth story that they've had out in Asia. And although sort of the potential parts of the infrastructure don't exist in Africa, they didn't really exist in places like India 10, 15 years ago either. And they can kind of see that path towards that trajectory in some of these other regions. And yet that discussion still is sometimes difficult to have. It's sometimes a challenge to actually convince LPs that, hey, actually there's a huge opportunity here, or convince new investors coming in on some of the portfolio companies that we might have. Hey, there's a huge opportunity here. You're coming in really, really early, but there's great potential here. And so how do you kind of navigate those discussions without discounting the value and the potential of your own companies, right? But curious to hear kind of if other investors have also seen that.
I think the one thing I'll add is you're right in terms of the valuation gaps are probably narrowing, even though the macro risk is expanding. So that's also a problem, right? So, you price a deal and you're pricing it in dollars. And meanwhile, there is someone in my home country, Nigeria, who's messing around with the foreign exchange rate, right? And before you know it, you've got a multiple that, you have revenue dependency in local currency, and then you have a valuation in another currency.
Yep.
So, maybe we're just, people like Falabi and I are a little bit just, a little bit old and grumpy. But, we always like to sort of point out that, there are strings that will get pulled that will undermine you as a startup, that'll be completely out of your control, right? And I think as investors as well, we also have to sort of make sure that we get everybody sort of, tuned with that line of sight to understand sort of where the risks are that are outside of your traditional execution risk parameters. But at the same time, the other thing we're seeing is, people are now beginning to understand that the world is actually probably, very much more similar than different, across geographies. And so, you've got the, well, we've seen this here, so you should work there. Now, remember, we did that before. We went through that with e-commerce, right? And that didn't end that well. But now with much more technology in the hands of the mass consumer and the like, even though their pockets are a little bit more constrained than say they were before, there are more opportunities. But the truth is that we are serving consumers and small businesses that are fiscally constrained in many different ways. And so the best part about technology being inherently deflationary is that the cost of serving those consumers and small businesses, it will be dropping. But at the same time, their actual available share of spend or pocket, or size of pocket, is dropping as well on a relative basis. So there's a pursuit, I'm not quite sure who's pursuing who, whether it's us using technology to pursue the consumers or the other way around. But, I do think that, as we sort of go out and start to serve these mass markets, yes, you can sort of build very large businesses on bips, right, of revenue. But at the same time, one thing I will point out, which I think I have increasingly sort of become more concerned about, is that in places like Nigeria, a lot of the startups that we're seeing are chasing the same 500,000 customers, right, in a population of 200 million. That's a problem, right? So we're not seeing too many of the companies of trying to serve the bigger markets. And we're seeing impact investors funding those companies, right? And I think, of course, in Africa, we're all impact investors when it comes down to it. But there is that huge gap that I want to point out is still not being served. These products are not being designed for the mass market. They're not being priced for the mass market. Meanwhile, the guys who are offline, who are doing sort of, sachetable food and sachetized, goods and services, are doing really well because they have true product market fit. We as technology investors need to figure out how to do the same.
It goes. I think that's well said in terms of people. I think a lot of people, investors and founders alike, overestimate the size of the markets that they are targeting or serving, and underestimate sometimes the challenges of really addressing the mass markets. I think, Ruby, you pointed out that the kind of naive assessment of risk. And I think that you are correct in saying that, that type of surface analysis, because it's in Africa, it's inherently worthy of a discount, is disappearing. And I think it disappears also as counterparts start to engage with people who have better insights into the market, i.e. local VCs like, VGG, Greenhouse, et cetera, et cetera. But I do think, as Agosa pointed out, that there are some structural differences in what startup founders, as you said, risks that we can't control. And I think, while we want to encourage people to see the long-term potential and upside from a valuation perspective of our businesses, I think there are also factors that temper that outlook in the near to medium term. It is possible to build massive businesses with material market impact, but I think there are also risks to the downside. And so I think investors that account for them in sort of valuation are not necessarily wrong. I think it's just trying to understand if it's, I'm going to call it naive discount, or if it's really based in assessment and knowledge of market and product.
Really, really good points raised there, Nina. So I think we're almost ready to wrap up. I'd just like to ask one thing. Igosa mentioned earlier that as a continent, we have to earn our stripes. And, we're all investors here today. And we look for, ROI, and we want our return on our capital. So just open question to the panel. Anyone can get this. When will we actually see I think someone mentioned, Falabi, you mentioned InterSwitch, the unicorn InterSwitch. When will we be seeing, more unicorns? When will our time come? What are your views? And yeah, just open question to the panel.
Next year. Next year.
I think that's a very brave prediction by Igosa. He probably knows some things that we don't know, which is the secret source of every investor. You have to have something in hand that the other guys don't know. But in this case, I actually know a bit of what Igosa knows. So the thing about it and unicorns is that we've spoken about this a little bit. Many things are not in control. And I think the biggest thing that in some of these, some of the markets, regional markets, is the exchange rate. When you make investments in local currency, well, in US dollars, and you make a return in local currency, you're running very fast, oftentimes just to keep still. So unless you're really on a rocket ship, which many of these companies are, some of them are hidden, you're really not going very far with a dollar investment. So getting to a unicorn is a whole lot of hard work. And when you sort of look pound for pound, how much work a founder has to do in Africa to first of all, get the company started, raise the capital, scale the business, and eventually break through the foreign exchange barriers and all of that to try and get to a unicorn status, it's kind of tough. The way you can do that is to line up your investors when you start. So you need to really work out, what your next 2 steps are when you start. So you don't do a seed round and then you wait for a while to do your Series A, B. You have to really work through the entire program, thinking about how, for example, you really diversify and create some risk-adjusted returns across cross-border interactions that are going to help companies scale faster. I think the companies that haven't done that already will need to find ways to do it and climb on that whole platform. And I'd like to point out that we talk about unicorns only really in terms of technology businesses. I mean, there have been unicorns and unicorns and unicorns galore in Africa. There are many of them who are multi-billion-dollar companies. They're just not technology native. Let's put technology native, right? So they might use technology, might even be technology enabled, some of them, but they're not technology native businesses. But many of them are moving in that direction today, and we will see more and more of them. So to your question, Igosa says next year. I think, like I said, he has some secrets that he's keeping very close to his chest. He's smiling. I would agree that we'll see some next year. And I hope that more of them will start coming down the tubes. I think we're in the second phase where we'll start to see real companies, like I said, with scale, sustainability come into the table.
Thanks so much for that, Falabi. And closing thoughts, anyone want to share something else before we wrap up? No one has actually talked about exits. So if anyone could also include that in their closing remarks?
Well, apparently Agosa knows something, so he has some secrets of alpha. I'm here, Agosa. I haven't spoken to you in a while. I'm your sister, junior sister here. I'm waiting.
No, I mean, I think we've been very, very fortunate. You know, I mean, like I was saying, we've missed a few good ones, fundamentally because of the lack of capital, actually. And it goes back to sort of the limited capital, because, you know, I think when I look back now, you know, I think I can sort of point that, you know, we would probably have been one of the top performing funds, you know, in the world if we'd had the capital. But we are doing okay, I think, without, you know, sort of on the basis of what we've had. But I think in terms of exits, what we're seeing that, you know, I'm really grateful for is that we're finding more founders that want to go the long way. They want to go the whole way. And so, you know, I'm sure there will be interim secondary exits along the way. But, you know, for the most part now, the ones that, you know, we've been lucky to invest in have absolutely no interest in that. They're just looking to try to build, and I'm going to say this because it's crazy, but, you know, they're looking to try to build $100 billion businesses. And I think next year, you know, we will have a few, and maybe, who knows, maybe there's a decacorn next year, you know, we'll see. But I think exits wise, those are the stories that, you know, while we've sort of been operated as secrets, we're encouraging folks to speak a little bit more out now, because at least next year, because I think these stories matter to infusing more dollars in the ecosystem. Because until people sort of truly believe that you can build very, very large businesses coming out of Africa, they'll just sort of look at LATAM and India and all the traditional places and the like. And hopefully, you know, we'll have a better year next year. And I think, you know, when more investors come and see that even during the pandemic year, a lot of African businesses got hit, came back, showed the anti-fragility we've always talked about, and have, you know, are now even begin to outperform. You know, then you're sitting and going, okay, there's something special in the sauce about African founders and what the companies they build, and you know, and we always keep saying this, but there is no unicorn, really. I mean, there are few exceptions, you know, like Viva and Co., but there is no unicorn that has not sort of raised significant amounts of money. It just doesn't happen. It's a physics thing. And so, you know, when you're now seeing African companies that will have a shot at it with, you know, not as much money, and you're talking about real capital efficiency, you know, hopefully investors around the world should realize that, you know, you can only imagine what will happen if you give them even more jet fuel. So exits, we'll see more. We'll definitely see more. But I think, you know, next year is probably more around valuations and progress and traction that will surprise people.
Awesome. I agree with you completely, Gosa. We need that jet fuel. And I think if we had to revisit this conversation in a couple years' time, hopefully next time this year, it would be different. And we hope that you're going to share your secret sauce with us post this panel. But I'd just like to thank everyone, Olga, Egosa, Nena, Falabi, and Ruby. Thank you so very much for your time today. And I'm sure everyone, you know, I always say when we have a panel, make sure that you deliver a lot of golden nuggets. I can assure that our audience are walking away with, you know, new learnings and new insights. And I think you've represented our continent really well. So thank you so much to my fellow panelists today. And I'd just like to remind the audience of the Founders Panel happening today, which is at 3:30 GMT, 6:30 Eastern African Time, or 9 p.m. Indian Standard Time. Please make sure to tune in on that. And once again, thank you so much to my panelists. And if anyone has some closing remarks, but otherwise, yeah, thank you. And if you have any questions, please pop it onto the chat and we'll try and address those. Thank you so much, everyone. Cheers.
Thanks, everyone. Thank you. Bye.
Bye.
Well done, you
Bye,
guys.
everyone.
Well done.